Hello everyone, I'm Charting Man Dan with the Chart Guys, technical trader for the last 13 years. And in this video, we're going to look at the broader market talking about the semiconductors. NVDA earnings blowing it out of the water, tons of hype and euphoria. It doesn't make sense, valuations, blah, blah, blah. That's the market we live in. We're going to talk about how the current market is shaping up with some clear bulls, some clear bears. We have to compartmentalize the market in our brains. It's not just one thing. There are very different things going on depending on what sector you're looking at.
All right, let's talk about bubbles. And I've got a clip at the end of today's video that I recorded over the weekend talking about bubbles and what I think of them and what I think of AI. And, if the entire sector looked like NVDA, then we could say, yeah, be cautious of a bubble. But it is just one name. And we have other names like Microsoft up at 52-week highs. And Microsoft is trying to make its way to all-time highs. We're about 5.5% away from that happening. But aside from a few major names that have been very strong over the last 4 to 6 months, and really it's just, Microsoft and NVDA, I'm not seeing a bubble in AI right now. As far as I'm concerned, AI is the spark to get retail back interested in the markets. It's kicking in some greed. Look at those gains. Oh my goodness. What about the possibilities? The market is always forward looking. And one thing that I've been saying for the last 8 years while I've been doing this with the chart guys is whenever someone misses an opportunity and they're, feeling FOMO, I always say, this is a long-term game. We're playing for decades and there's going to be new technologies that we're trading. And the example I always give is in 5 years from now, we might be trading anti-gravity stocks and there's going to be hype and euphoria around that. And so right now it's AI and it's going to be quantum computing a lot more as well. Maybe it's going to be psychedelics in the next couple of years as well, depending on the political changes that take place around that space. So the market is always looking at where can I be early? What's the next big thing and where can I be early? And you can make the argument that AI is no longer early. Sure, you can make that argument. For NVDA, that's certainly the case. There's no being early on NVDA. The move has played out. We're up almost 300% from the fear lows. But look at these names, the other names in the space. AI. Look at this bear market. We're coming from a bear market. AI is trying to confirm the first monthly uptrend in the history of the stock. PLTR just formed a bottom and it had its IPO in Euphoria 2021. Is PLTR going to be hitting all-time highs in $100 4 years from now? Maybe. I don't know. I don't know much about the fundamentals. I just know it's, doing its best to attach AI to its name. So I do not think this is a sector-wide bubble. I think that it is a catalyst for the short term. It is definitely a catalyst for the semiconductors, but the charts are not saying bubble. For me, the charts need to be blue sky breakout, hundreds of percent gains. And if everything was doing what NVDA is doing, I'd say watch out for the bubble, but that's not the case. So congrats NVDA bulls exploding higher. And honestly, if you're a technical trader, nobody should have been an NVDA short. And number one, earnings are a gamble. But number two, the NVDA bulls have been proving to us that they have absolute full control time and time again. I made one attempt to swing short NVDA because it looked overextended. And I stopped out break even at 280. This right here, you look back at the last few months, right here is where the bulls said, no, we're not done. And that you'll see that oftentimes on short-term timeframes, essentially holding a key level and then significantly reversing momentum from there. And that is definitely what happened at 262, the line in the sand where bulls said, nope, we are not done. And that was a pivotal turning point for me because I got stopped out here. And then I was, open because it was break even stop out. I'm open to trying again. But as soon as that double bottom forms and we head back to 280, nope, not interested, looking short. So really nice trading today. I was trading both directions like a madman today. The dollar volume is absolutely insane. You're going to hear people talking about valuations and PE ratios and all that. And I just can't stress enough that one of the most beneficial things that has helped me make money in markets the last 13 years is treating it as a video game, detaching it from reality. When I look at Apple stock, I don't see a phone. I don't see storefronts. I see numbers flashing around and I see levels based on numbers. That's it. That's all that exists in this virtual reality world of flashing numbers. And the people that don't view it that way get into trouble. And yes, there are fundamental traders that can do well. viewing the world and stocks in terms of fundamentals. But more and more, things are changing. All you got to do is look at, the GameStop scenario, TLRY, when it ran up to insane market caps. Ooh, something happened to TLRY after hours. That's bad news. 150 convertible debt. Death spiral. Death spiral. Anyways, TLRY, look at this move to 300. The market cap up at 300 was something like putting it in comparison with the largest companies in the world when it's this junk cannabis stock. So just be aware that because it's an automated trading game and because there's algos and emotions and social media, that the fundamentals go out the window. So imagine your grandpappy's stock market. I always say it's not your grandpappy's stock market anymore. Imagine going back to 1950, 1960s, when you're looking at the stock market in the newspaper. Valuations ruled everything. There's no automated trading. There's no social media to trigger emotions. There's no huge amounts of capital injected into the system. There's no average Joe playing the game. Well, there's some, but not many. It's a very different game. It's evolving with technology, and it's going to continue to do so. And I do believe that the more you maintain that it's just flashing numbers as it continues to evolve, the better it's going to be for your P&L. So NVDA, massive move up, back burner galore. So we hit pretty oversold 5-minute conditions on the morning, led to a great 7% bounce. I was playing the bounce, I was shorting it, and at this point, I'll be looking for the next trade to be hourly oversold conditions, looking for a daily high or low as far as a high probability trade. There's going to be a lot of bears looking for daily consolidation to get back into this gap fill, and I will be one of them. Tried for the 15-minute lower high here, and I did get stopped out. I was looking for that 15-minute lower high to be here, and we had one more push up before it formed. But we had a nice tightening hourly range on the day. We can see, the high of pre-market, low of the day, lower high, and 366 is a key level. I also saw 385 come into play a lot with day trading today. And if we just put the line up at 385, we can see that was the wall in the sand, the line in the sand in the morning. We rejected from it again. We rejected from it again. So I'm going to be keeping an eye on 385 from here on out. It just seems like a level that's come into play a lot. And anticipating some really nice trading opportunity in the semiconductors to continue. So we're going to look for daily consolidation on SMH eventually, but we're then just going to look for daily higher lows on NVDA and SMH and all these names that are really strong. Microsoft with its higher high. We have a new benchmark level. I love when we set new daily higher lows because I can then move up what my most important support is. Before yesterday, Microsoft, my most important support was 305. It wasn't anywhere in play. And now we've got 312.61 as my most important level. The other AI names sold off today. So AI gapped up with NVDA and sold off. IONQ, supercomputing name, had a great first hourly oversold bounce yesterday, gapped up and sold off all day. PLTR, gapped up and sold off all day, recovered a bit. So keeping an eye on that. I will be interested, again, just establishing game plans looking ahead. I'm going to be interested in a PLTR, weekly high or low, next time we consolidate. And so, the people that are calling it a bubble on these names, you've got a ton of capital on the sidelines that will be buying consolidation on the longer term timeframes. So I'm going to be looking for PLTR, weekly high or low, IONQ, weekly high or low, certainly NVDA whenever that happens. What else? AI, tons of space for a weekly high or low, certainly going to be looking for an entry for that weekly high or low. So that may be in 3 weeks, that may be in 6 weeks. But I just know this is a trade setup that will eventually happen, and I will be looking for a long swing entry when that does happen. NASDAQ leading the way, keeping an eye out for a 15-minute rising wedge. In bull markets, rising wedges can break bull, but watching this. We had another spike up where Biden and McCarthy said today that, they're confident a deal is going to get done. Every time that happens, it just means it's more priced in for me. So again, I'm anticipating that there is a potential short to be had on news of a deal being reached, but you got to let that initial spike take place on that news. So if this NASDAQ 15-minute rising wedge breaks bear, we zoom out, we scout a 4-hour higher low. Daily bull flag confirmed. Again, talking yesterday about how this chart looks just fine for the bulls. And you have to separate in your mind, again, you can't refer to the market as just the market. That's way too simplistic. That's for the individuals that do not look at the market. They do not participate in the market. They can talk about the market in one word. The market is bullish. The market is bearish. Leave that to them. For those of us that are paying attention, that is way too oversimplified. That's like saying in, the United States right now, it's sunny. In Massachusetts, it's rainy. No, you can't do that. You got to look at under the hood. There is team bull and team bear. Clearly, semiconductors and tech are team bull. Clearly, the financial sector and healthcare are on team bear. Growth names chopping around this week. They had a big bull move. They gave a lot of it back. They're trying to find out whose team they're on. They're more on the bear side than the bull side at this point. But that is how I am viewing the market. And so, if you are trying to short the market, it's not a good idea. If you're trying to short the weaker sectors, probably is a good idea. So just compartmentalize your brain mentally and break the market down because it's not just one thing. So NASDAQ is all bull. We have a new benchmark level, and I will say as long as QQQ is holding 329.56, the bulls have absolute complete control. As far as resistance is concerned, we're looking at the high of 341. We're looking at the 345 range. There is a lot of resistance in that range, but the daily uptrend is a nice guide. The S&P 500 is doing nothing. It's sideways. It's not showing a ton of strength. This is 7 weeks that we've been trading here, and look at the range that I marked today, and look at how many times we've hit this range in the last 7 weeks. Nothing's going on in the S&P 500 because it's a very evenly balanced tug of war where you've got the team bull that I just mentioned tugging against the team bear, and they're fairly evenly matched because it's essentially like the way that the market is weighted and the way that it is shaping up right now is you've got, imagine literally tug of war, you've got the tech and semiconductor bulls, they're bigger. There's fewer of them. There's fewer individuals there on that side, but they're bigger and stronger. And then you've got more people, more sectors, more names on the bear side, but they're weaker. They're smaller. They're not as important for the market as a whole. So that is why we are currently evenly balanced. That's why everybody keeps talking about the breadth of the market, but I keep saying the market is not going to see any fear as long as our major names keep hitting highs. Microsoft and Apple are both less than 6% from all-time highs. Microsoft is, or I should say Amazon, is 64% from all-time highs. Those are the three most important stocks in the market based on their holdings in SPY and QQQ. Tesla, new benchmark daily higher low support. 178.22 is now a key level for the bulls to maintain. Anything under 192.96 is a daily lower high. The bears would have to fail the high and confirm the daily downtrend if the bears are going to start to take over a bit. Financial sector still very weak. Trying to get a bounce going. If we do, there's a ton of space for a daily lower high to be the result of that bounce. Simple statement. The bears have absolute complete control and nothing to worry about in the financial sector as long as weekly EMA 12 is resistance. I was looking for a bull break this week, and it failed. So that's that. KRE is still seeing pullback, and it is potentially shaping up a weekly lower high. I had a target of keeping an eye out for weekly EMA 12 resistance. We got fairly close. We got within 3 to 4%, but a weekly lower high is the most likely scenario here, and that may be shaping up. Still a daily uptrend, and we would have to see next time we bounce, fail the high, confirm the daily downtrend to be confident that that weekly lower high is shaping up. Healthcare, very bearish today, falling through to daily oversold. So if we are going to see, look at the historical daily RSI. We don't get daily oversold very often in the healthcare sector. And we can see that in the last, we'll say 14, 15 months, we have bounced from this range every time. We've gotten a little bit lower, 28, 29, and today we got down to 20, 30, 29 area. But again, I'm watching for the weekly high or low. But the bulls have to prove it. It's not going to happen overnight. We've got to bounce. We've got to set a higher low, a higher high. So something would have to shift significantly. But I am watching for this to be a tightening range. And then how that breaks, potentially, let's just assume we set a weekly high or low, and then we bounce for a few weeks, then we pull back. Next thing you know, we're in July. And how we break the second half of the summer of this tightening range, if we do get it, is going to have significant implications on its impact of the broader market into the second half of this year, Q3, Q4. IWM, the red flag from the bull break on Tuesday, following through notably for the bears. So a fake break. Look at the weekly EMA 12. We got so far over it, but here we are rejecting again. And a lot of that to do with the financial sector weakness. We look at ARKK. It had the same thing with the pretty sizable pullback. And we're still going to look for a higher low compared to 37.42, but bears are just going to be waiting for the head and shoulders attempt here. So there's a potential daily head and shoulders shaping up on ARKK. There's a potential daily head and shoulders shaping up on Apple. This would be very notable to me if that were to play out. Great spot to hedge. If I got a long Apple IRA, I'm looking short with a stop over the high. If that breaks, then it's not a head and shoulders. If we don't break it, it's going to be a head and shoulders. So that's going to be a key setup that I'm watching over the next 2-3 trading days on Apple. Biotech sector, big time drop. It's got space for a daily lower high to be the result of the next bounce. So again, if someone says I'm looking bullish the market or I'm looking bearish the market, we don't have any information. If someone says I'm looking bearish on XBI next bounce, absolutely, that makes sense. I'm looking bearish the financial sector, the next daily bounce, absolutely. I'm looking bearish healthcare, the next daily lower high, sure. I'm looking bullish for the higher lows. We were looking for these daily higher lows to be the most likely scenario on Google, Amazon, QQQ, etc. Obviously, the NVDA earnings helped accelerate those forming, but we knew it was the most likely scenario, so that's what we were looking for. Stick to the trends on the individual names and individual sectors that you are watching. Uranium, CCJ, good sign for the bulls to break the inside bars bearish with zero follow through, but gave back a lot of that bounce. We've got to confirm an hourly uptrend. And right now it's just a battle of a daily head and shoulders or a weekly bull flag. And I honestly don't know which it's going to be. I don't have an edge right now, but that's the beauty of trading and technical analysis. I am in a risk-free swing position from last Friday, and I don't need to know. If it's a head and shoulders, I'm going to stop out and not lose anything. I'll lose profit. If it's a bull flag, it's going to break out, and I'm going to have a real nice win. And so again, technical analysis and trading is not about predicting the future. I cannot accurately predict how CCJ is going to break from this range, but I can only benefit. And that is what trading is about in a nutshell, putting yourself in position to benefit and not be harmed. Dollar, still all bulls. I have no interest in the metals as long as the dollar is this strong. Keep an eye on daily overbought RSI. It's getting close. Maybe the bulls start to tire. Once that happens, gold still weak. Not close to daily oversold just yet, but fresh lows. Silver leading the way down. Big time bear follow through ever since the red flag of everybody being bullish. Got to make a video about social media sentiment giving us some clues because this was one of them. And it was with regional banks as well. Regional social media helped me with the regional bank bounce. Miners, big bear day yesterday. I'm assuming we followed through. So big drop, daily oversold conditions, but the dollar has to show signs of weakness. Oil, red flag for the bulls to break that daily inside bar or that tightening range bullish straight into a big red day. Got to be cautious of a quick weekly lower high. Natural gas, we knew the daily lower high was the most likely scenario. We couldn't say that it's going to be a bear flag, but we knew to be ready for the lower high. Didn't get to 382 retracement, daily bear flag confirmed. Weekly consolidation is potentially shaping up. Weekly trend change straight into a red week, not ideal. I appreciate you watching. Do good things and have a great weekend. Jungle Funk Joey is about to go live for a webinar.
So we know AI is all the buzz right now, and we have the potential of what this technology could do in the future. And of course, we as traders want to know how can we profit off of that potential. And I would consider myself a hype sector specialist just because I have participated in so many of them, whether it was cannabis 2013, 2018, crypto multiple times over the last 6 years. And one thing that is notably standing out to me is this setup is currently very different. People are already talking about an AI bubble, but because we are coming from a year and a half of bear market on some of these names like PLTR or AI, it's a very different setup. I am used to bubbles being euphoria, blue sky breakout, hundreds of percent gains. And so in my opinion, the charts are not telling me that we're anywhere near any kind of bubble at this point. So I'm going to be keeping an eye out for signs that that euphoria is building, but I do not think an AI bubble is here in the short term. So I'm going to keep an eye out for that opportunity.